You are listening to First Metro Securities Philippine Stock Market Weekly Podcast, delivered every Tuesday, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host, Royce Aguilar, from the Research Department at First Metro Sec.
Hello everyone, so welcome to this new weekly podcast, and we titled it the Philippine Stock Market Weekly Podcast by First Metro Securities. So our sequence for today, we'll discuss our weekly summary and outlook for the PSEI, and then we'll discuss 3 stock picks. So for this week, we have 2 buy calls and 1 sell call. For last week, after a volatile week, the PSEI contracted by 1.39% week on week to close at 5846.02, so that's around 82 points, as the capital region and other key cities reverted to stricter lockdown measures under a modified enhanced community quarantine. And also, the DBCC, that's the Development Budget Coordination Committee, downgraded its 2020 projection of key macroeconomic variables. So we saw a downgrade of around GDP, inflation, and the like. So losses were paired in the middle of the week despite worse than expected numbers, including the GDP. So we saw a 16.5% contraction compared to expectation of only 9.4%. Oil remittances also dropped lower than expected at 19.3% compared to expectations of 15%. Inflation also came in at 2.7% compared to expectation of 2.5%. Manufacturing numbers also came in lower at 48.4 compared to 49.7 in June. We also saw below consensus earnings for some listed corporates. In terms of volume, there was a relatively high volume at 6.6 billion, and foreigners were net sellers by 9 billion. If you exclude the 5 billion cross from Emperador, volume is still at 5.5 billion for the week, and net sellers, foreigners were net sales by 3.5 billion. In terms of our expectation for the week, we expect the market to trade lower. So we saw some warnings from Fitch Ratings and Moody Investor Service of possible credit rating downgrade given the Philippines' difficulty in containing the spread of the COVID-19. So this is tied to the government's budget stability. So investors will also closely watch the results of the MSCI Quarterly Index Review to be announced on August 13. We also have corporate earnings releases this week. We have DMC, Semirara on Monday, and then we have Ayala Corp on Thursday. On the global front, ICE will still be on the escalating US-China tensions after President Trump signed executive orders effectively banning some Chinese-made apps. So in terms of our stock picks, we have 2 buy picks and 1 sell call. First buy pick for the week is SM Investments Corp. So global index provider FTSE Russell confirmed that SM, along with its subsidiaries SM Prime Holdings and BDO, have been independently assessed according to the FTSE for Good criteria and have satisfied the requirements to become a constituent of the FTSE for Good index series for the second straight year. So although this has not directly impacted the company's profitability, the growing interest in ethical funds and inclusion of ESG, so that's environmental, social, and governance, among international funds as one of the main factors in making investment decisions. So this actually gives SM a strong investment thesis. So as a testament to its excellent ESG initiatives, SM was included in this FTSE for Good index series, which is widely used to create and assess responsible investment funds and products globally. So we do recommend accumulating at current prices. So of course, if you are a trader, if you want to trade the index, you can set your cut loss below 840, so that's the reset low. But for long-term investors, keep in mind we still have a target price of 1242. Okay, our second buy pick is Emperador. So the news that we received late Friday is that Emperador will be part now of the PSEI, and the change will take effect on August 17. Besides the inclusion, we also saw some strong earnings from Emperador, right? So EM's inclusion in the index will further put upward pressure on the stock, as index tracker funds will also buy and add their exposure on the stock. Hence, you can buy it at current prices. If you're more conservative, you could buy above 9.50, set your cut loss below 880. And lastly, so we have a sell call on Semirara. So Semirara was the one replaced by Emperador. Besides that, it's expected to release earnings on Monday. Actually, it was expected to release earnings yesterday. So, of course, some more details will come as you will see in our daily report. But nevertheless, SEC's removal from the index will further put downward pressure on the stock. So, index tracker funds will now have to sell the stock, right? Of course, you will see your mutual funds, if you're following or if you're tracking PSEI mutual funds, they have to sell Semirara and make room for Emperador, right? So besides that, downside risk remains on the earnings side amid lower demand and depressed coal and West M prices. So we prefer to wait Semirara to build this new base after an expected drop in share price before trying to position. So we recommend current holders to lighten. Next support is 935. So if you're looking at the reversal, a breakout above 11.10 is a sign of a trend reversal. So that's it for the weekly summary outlook and stock picks. Okay, so our theme for the week is the strong Philippine peso. Of course, we've been seeing dollar weakness. We've also been seeing peso strength. And at this podcast, we'll discuss the reasons for the strength of the Philippine peso and the weakness of the Philippine dollar. Okay, so just keep in mind that the performance of the peso compared to the end of 2019, so technically the performance year to date is around 3.14% appreciation against the US dollar. So let's talk about the strength of the peso first. Of course, no, mostly it can be attributed to the weaker dollar relative to a stronger peso. But at the end of the day, the peso outperformed in Asia. Right? It's the best performing Asian currency for a reason, and we'll tell you why. So let's just discuss. So according to the government, of course, the main reasons for the peso's growing strength and stability are the country's strong balance of payments position and rising gross international reserves. The Philippines had a balance of payments surplus of around 7.8 billion, which is 2.2% of the GDP, so that's the highest since 2012. Meanwhile, the gross international reserves is equivalent to around 6.5% higher than the same period last year. So this was around as of end March 2020, and it's equivalent to around nearly 8 months of imports of goods and services. So our gross international reserve is around 5 times the country's short-term external debt. So, of course, the strong macroeconomic fundamentals, this supports the country's financial position. Just keep in mind, of course, for the past how many years, the country has been one of the top growing economy. So, of course, excluding what the data that just came out last week, we were on one of the underperforming. But, of course, in terms of the trend prior to this, so we were really the leading one. So, of course, we also have manageable budget deficits and prompt adjustment of monetary setting in response to the current developments. So that helped the peso strength. So when you talk about the performance of the peso during a crisis, during the Asian financial crisis in around 1997, the peso went to as low as 56 against the dollar. During the 2008 global financial crisis, so it weakened around 14%. So of course, today, despite the COVID-19, we are actually the top performing Asian currency, right? So what differed compared to the past crisis? Of course, as of the moment, besides that, having a higher or a balance of payment surplus and a higher gross international reserves, this can be also attributed to the much lower debt obligation relative to the GDP. Right. So, of course, this has been the debate especially when the 9 trillion debt came out, right? But at the end of the day, if you want to talk about the peso strength, we have to compare ourselves in terms of economic data compared to other countries. So, in terms of absolute amount of debt, we saw the debt of the Philippines go up. It's equivalent to around 41% of GDP as of end of last year, from around 71.4% at around 2003. So there's a big difference. And when we try to compare the debt to GDP ratio of the Philippines compared to other countries in Asia, so we have Vietnam. So of course, Vietnam is also one of the rising Asian countries. So we had 41.5% of GDP, right? Debt to GDP. Vietnam has 57.5%, so a bit higher. Malaysia has 51.8%, China 50.5%. So Singapore more than 100%, right? That answers, right, why are we outperforming in terms of the currency? So because of that macroeconomic backdrop. Another is our significant, of course, keep in mind, when the peso goes back up, the value of the dollar denominated debt will have an effect in the country. But what made the peso outperform also is from a peak of around 70% in 2000. The Philippines' external debt to GDP ratio has dropped to 23.3% by end 2019. You can see how the economic data in the Philippines has improved. So even in terms of debt to GDP, external debt to GDP, you can see how we fare compared to other countries. That tells us, at least in a nutshell, why the peso is strong and why it outperformed against the strength of the other currency. So let's talk about the weak dollar. So the US currency has been falling steadily ever since the world recovered a bit from the initial stage of the COVID-19 crisis. It has done so in line with the significant decline in real yields, right? So with lower yields, there is lower carry to be earned by parking in the dollar, so the currency would be expected to weaken. Of course, there we saw coordinated efforts by central banks around the world, which would increase the supply of dollars and have supported a rally in other major currencies. Let's compare first to the the most comparable or the most traded pair in the forex is euro USD, right? So the euro comprises approximately around 60% of the dollar index. So the euro rallied by more than 6%, right, compared to its low in March. Besides the stimulus packages in other countries, the euro also had a really significant stimulus package. That's around 1.35 billion in US dollars. So that's what they call a European Recovery Fund, which lines up some future fiscal union and is positive for the euro. So, of course, US interest rates now are near zero. That means less demand for US dollars and more strength for the euro, right? So, the US dollar weakness was also seen in Asia, of course. Not only the Philippines gained strength, but also other currencies. But as I've said, year to date, the Philippines is the top performing Asian currency. So, when you talk about the 2020 low, that's around March, the Indonesian rupiah was actually the outperforming currency when we compare to the March low. But year to date, still the Philippines. But of course, the Indonesian rupiah significantly appreciated, mainly because it's a commodity linked currency, right? But again, the best performing Asian currency year to date is the Philippine peso. So that's the status quo. That's the status right now. The Philippine peso to USD right now is around 49 to a dollar. Okay, so what's the risk to the status quo of what we're seeing now as a strong peso and a weak dollar? So looking at the peso faces some risk in the near term, right? So the first one, the government's build program. So once the dust settles, once economic activity restart again, for example, if there's a vaccine, economic activity can start again, the government will resume the build program. So spending on the country's infrastructure program could be bigger in the next few years. Duterte has until 2022 in terms of his term, and they will really try to catch up on those kinds of projects to complete those high value infrastructure projects. And keep in mind that for us to successfully be aggressive in terms of our infrastructure program, we have to import. And rising level of imports can have a negative effect on the country's exchange rate. Right? That's the first one. Second one is the OF remittances. We saw data last week where OF remittances last May 2020 came in 19% lower. Right? That's actually below estimates of 15%. So OF remittances, which is one of our major sources of dollars, could fall this year, which likely will fall this year. Number one, the significant decline in oil prices and the negative economic outlook for the global economy. Our central bank said that OF remittances could fall by nearly 1% for the whole year. The World Bank was forecasted OF remittances to be lower in 13% by 13% of the year. There are actually other agencies forecasting a significant lower OF remittance as well. So that's the risk, right? So those basically we still have to watch out for both the rebound in the dollar and the possible weakness in the peso as a risk compared to the status quo right now. So we have to watch out for the data and the status of the economic recovery moving forward. So that's it for us. I hope you gained a quick understanding of about the current status of the strength of the peso and the weakness of the dollar and the risk facing that status quo in the near term. So that's it for this week's podcast. I'm Royce Aguilar. Thank you for listening in to the Philippine Stock Market Weekly Podcast by First Metro Securities. As always, your future first.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly Podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.